coming up on this week's call?
We have a range of loan products that we've worked on. The range that we rolled out is actually by far the broadest range of any of the digital banks out there so far. There's different kind of safety levers. And what we're trying to do right now is to balance properly. When macro is looking bad, you want to run to safety on the asset side. You want to make sure that you have products that can actually scale despite the negative macro. So we're looking for those types of risk mitigants that will get us through this down cycle safely and will still allow us to scale despite macro turbulence. We used to have branches for banking, right? Then we had the internet banking, and now we have the app. But I think in 10 years, it's going to be like you telling your phone, hey Siri or hey Joe or whatever, I want to take a loan for $5,000. Go get me a loan. And Siri is going to go and get you a loan.
Hi folks, welcome back to On Call with Insignia, where we go on call with leaders innovating the future of Southeast Asia, or as we like to call it, Asia Innovation. I'm your host, Paolo Aquino. And today we are in for a treat because we have a returning guest who's been on the show quite a few times actually, and it's been really a pleasure to see his journey as an entrepreneur and the journey of the company that he's building right now has really evolved over the years. And we're going to get to catch up with him again. In this call, we have none other than Greg Krasnov, who is the CEO and the founder of digital bank Tonik in the Philippines. So thank you once again for coming on, Greg. How's it been?
Hey, Paolo, thanks very much for having me on. Great to see you again.
Yeah, great to see you again as well. And you were last on the show in March last year, so it's been over a year now. And we were talking a lot about back then how Tonik had really amassed a lot of fuel to really build on its digital banking business. And since then, you guys have launched a lot of different loan products. So maybe you can run our listeners up to speed on what Tonik has been up to and what you guys have achieved so far.
Sure, Paolo, happy to. You might recall that in the early days in 21, we launched in March 21. And our original launch was very focused on collecting deposits because we wanted to see how much of that raw material we can bring in and how quickly. Because our main objective has always been to focus on solving the credit inclusion issue in the Philippines, where, over 95% of the Filipinos have never borrowed from the bank. So basically for us, what we saw is our deposits went above our expectations and very quickly. We got something like $50 million in the first few months. That's when we started hitting the brakes, actually slowing down the advertising because we didn't want to collect deposits until our loan portfolio was ready for scaling. And without really even trying very much, we grew our deposit portfolio to about $130 million today. But again, it hasn't been our objective to accelerate growth of the deposit portfolio because that's just amassing raw material. It sits in a warehouse and you have money tied up that you're losing money on that inventory until you can actually put it into production. So last year, our biggest objective was deploying a range of consumer loans so that we can productively put all those deposits to work and working on getting them to unit profitability so that we're actually making money on every dollar that we lend out. We're a bank. We're not a fintech, which means the regulator puts a very different standard of diligence on us in terms of profitability of what we do, right? It would be considered irresponsible by the regulator if we put out loan portfolio that doesn't actually make money at the unit level where there's too big of a burden. Last, I'd say, so 2022 for us was very focused on launching these loan products and working on the unit profitability. And this year, we're now seeing that a number of these are coming out to unit break even. So we're starting to scale them up. So more specifically, what we launched was a few different kinds of cash loans, unsecured cash loans. We launched a shop installment loan, which is something that we are selling in the stores. It's basically consumer electronics, white goods, black goods, brown goods, furniture. So we're partnering with the stores to put our product there right on the shelf with the consumer lifestyle improvement goods. We also launched a product called Big Loan, which is a home equity loan. This is a cash loan, but secured against real estate. So we started piloting the beginning of this year, and we've done some nice campaigns on it. We're iterating that product now to further increase its appeal. And I expect that by the end of this year, we'll start scaling that one up as well. We've also created a cash loan product, which is an upsell to the good clients that we have. Because once a client has proven to us that they can repay, we'll want to offer them the next loan and the next loan, and we'll want them to stay with us forever. We want to get married. That's a product that's done really well for us. And another product that we didn't launch that organically, but we actually acquired a company called TendoPay. TendoPay is doing payroll deduction loans. So basically, they partner with employers to offer a benefit program to their employees. And a key part of the benefit program is a salary deduction loan, where it's directly a payroll deducted for the month. So Tendo is another one that's already had the unit profitability when we bought them. So actually, from the beginning of this year, we've been scaling them out quite aggressively. Very exciting place in the Philippines for that particular product. We have a range of loan products that we've worked on. The range that we rolled out is actually by far the broadest range of any of the digital banks out there so far. And we believe we're in a most advanced position in terms of proving the unit profitability on these, start to scale.
Is it correct to say that speed is really, because I think for Tonik, something that you guys really built almost like a brand on is the speed with which you guys grew from launch, right? First with the deposits, and then now I think even with the loans, you guys have been really aggressive on that. Is it really a matter of speed for this type of business? What are the other factors that you guys are looking at in terms of building out this loan portfolio?
Deposits don't have a credit risk involved. So they don't have unit profitability as such. You don't make money on deposits until you've turned them into loans. Think about a bank as you bring in raw material, which is the money of deposits, but then that raw material to make money needs to become loans. So the deposits, yeah, we've gone very fast and we actually slowed it down on purpose. And some of our competitors are out there PRing right now how big their deposit book is. And some of them are bigger than us. When I hear that, I go, great guys, good luck with that, because a big deposit book without a loan book just means that they're burning way more money than we are, right? It's really all about getting those loan products in place. Now, we went quite quickly to introduce the products to the market, but then to operate at unit profitability on unsecured consumer loans, it takes time because basically you need to train your credit system and you need data, you need performance data in order to train that. So you need to see a customer once you've booked him, you need to see him over a few months. Our typical loans are 12 months plus. So you need to see it performing over a few months to really understand who is a good client, who is not a good client. And really every month and every week, we're refining our credit systems to make sure that we're making good credit decisions and making profitability. So that's a pretty time consuming process. I'm very happy to see our progress on that. At this point, a few of our products we've already proven out unit profitability and are starting to scale up. And a couple others I think are in a good place. And by the end of this year, should also be starting to scale up.
I'd like to double down a little bit on the loan portfolio that you've built up. You talked about some of them, the cash loan, shop installment loan, big loan as well. Was there, maybe you can run through quickly what the thought process with regards to the order of launching these? And you talked a little bit, I think, last year about focusing a lot more on secured loans given the current environment. So maybe you can talk about what this portfolio setup has meant for Tonik in particular with regards to the current environment and how you're really building this banking business.
Yeah, having a diversified product portfolio on the asset side, on the lending side, is very important to making sure the bank is sustainable through different economic cycles. And when times get tough, of course, you want to be more safe, more secure in the types of loans that you have. And it could mean security in terms of pledges over some assets. It could mean security in terms of the customer making a down payment against something that he's bought with your loan, which is like the case in our sales finance. We typically require about a 20% down payment from the customer himself. Let's say they buy a TV, we provide 80% of the financing, but 20% has to be given by the customer himself. The big loan, of course, there's security on the property. Even within cash loan, we have different gradations. They're not driven by security itself, but they're driven by the demographic because different demographics are exposed to different types of economic influences. And so what we're seeing, for example, is in our currently, as you guys might have heard, second quarter for the Philippines was a very unhappy GDP story. There's a lot of pressure on the consumer economy. We had actually a small contraction quarter on quarter in GDP, about 0.9% quarter on quarter. So the government is touting this as year on year growth, but the reality is quarter on quarter, we're actually down in the same. And most of that issue is inflation. We've had rampant inflation for the last 12 months. The BSP has jacked up interest rates that hasn't yet brought down the inflation. And that inflation is disproportionately affecting the lower middle class and the lower income parts of the pocket because they get squeezed, for somebody making, let's say, $300-400 a month, how much they spend on food is a very significant proportion of their total budget. So when food prices go up by 20%, that creates a big squeeze on the disposable income and on their ability to service loans. There's different kind of safety levers. And what we're trying to do right now is to balance properly. Yes, as I mentioned to you, the reason I was so keen to launch the big loan was because I could see it coming. It was not rocket science. Macro was looking bad. When macro is looking bad, you want to run to safety on the asset side. You want to make sure that you have products that can actually scale despite the negative macro. So payroll deduction for us, for example, that's a great downside protected mechanism because unless the employer defaults, the employer would have to go under. And okay, we've had a couple of cases of employers going under, but it's not a major part of the loan. So it's a very stable, safe kind of source of repayment where you can go directly on the payroll. So we're looking for those types of risk mitigants that will get us through this down cycle safely and will still allow us to scale despite the macro turbulence.
I also wanted to talk about the repayment side of things, right? And I'd like for you to talk about Tonik's approach, maybe from two points of view. First, really the user experience side, given that Tonik is a digital bank and all transactions, interactions are done through an app. Like, how does that make repayment unique for Tonik? And then the second aspect of it is you talked about earlier, really building this credit algorithm, this credit bureau, which in the previous podcast you said that the Philippines doesn't really have that. So you have players like yourself really building this out from the ground up. So yeah, maybe you can start with that first. Yeah.
Yeah, the loan repayment for the customers, they can take advantage of a variety of mechanisms that are provided in the TSA. What they can do is send money from their bank account. They can also, for the users of two of the banks, it's Union and BPI, we're providing a pool where we have an API to the banks and we'll pull the money. So they can, from inside the Tonik app, can pull the money there. They can pull money from their Gcash account. They can also top up their account from any of the over-the-counter options that we offer, including 7-Eleven, some of the big on-shop chains, etc. So it's a pretty broad range of mechanisms. We're currently working on an additional way for the customers to top up their account and repay the loans specifically, which is Tonik as a biller. So we're working on getting integrated as a biller in a number of the billing systems out there so that they can just pay directly to their loan account without having to go through the TSA. We also have a product, our Flex Loan, which makes it super easy for the customer if they have a salary account. All they have to do is just activate their debit card with us, and we'll just charge the debit card monthly for them. And then they don't even have to think. It's just like automatic. And of course, for us, it's great because it makes it a bit safer for us. So we can offer them a bit of a discount on the interest rate. So we offer a very broad range of payment options and try to make it as convenient for the customers.
And this isn't your first rodeo building a bank. I was curious to know like what anything new in terms of learning so far, trying to build this bureau for Tonik and trying to figure out what will really help scale the lending business here in the Philippines.
Yeah, I previously built a bank in Europe, a consumer finance bank in Ukraine, but that was mainly an offline bank. We didn't really have this. We're talking years 2005, so this is before fintech, right? So we had a very big network of points of sale, and we had over 100 branches. The loans we were selling through points of sale, where we had our physical promoter in the point of sale. Mainly, it was like retail partnerships. So we would have same as what we're building now in the Philippines. So our sales finance. That was different days, and you didn't have as much data back then. Now I think it's more advantageous in a way that we're swimming in this massive sea of data. And so how to make good use of that data and really create proper systems for the data lake itself, the data warehouses, the machine learning and AI stuff that sits on top of that, that cranks it for looking for predictiveness. So all of that is a very exciting experience for me because you can really squeeze a lot of value out of this data. For example, we're using device data quite actively. And I was a co-founder of another company before Tonik, quite a lot, which I specializes in this space. All they do all day long is they're taking the stuff that's in your smartphone, they're pulling it out and creating a scorecard. And I can guarantee you, your smartphone actually knows way more stuff about you than your wife or anybody else. It's actually an incredibly data rich environment that is behaviorally extremely predictive if you know how to crunch it. So Lab is one of our partners at Tonik as well. And we're using their data. We are using telecom data. We're using the data of the customer behavior in our app, which channels he has come in through, how did he kind of work with the app, what's he doing with his account, et cetera, et cetera. So it's a lot of information to process.
Mhm.
but very exciting. We decided that this is such a strategic area for us, especially with the advance of AI now. That we're looking for a senior person to bring into the team as a head of AI and machine learning. We already launched AI, our contact center. It's actually, we launched that project about a month ago. And we can see that in this month, at this point, about half of our customers avail of the AI chat instead of going to the agent. And they're happy with that. And we're going to continue to improve that. We're working on generative AI product that we can layer into what we're doing today. I think in the future, AI, we used to have branches for banking, right? Then we had the internet banking, and now we have the app. But I think in 10 years, it's going to be like you telling your phone, hey Siri or hey Joe or whatever. I want to take a loan for $5,000. Go get me a loan. And Siri is going to go and get you a loan. Oh, by the way, my Siri on my
That's pretty funny. Yeah. Okay.
if Siri is listening, man.
Right, right, right.
I think it's all going to go that way. So we need to be at the forefront of that. So we're investing quite heavily into this, and also for credit applications, of course, because there's predictions and trends that humans cannot make nearly as accurately as machines.
Yeah, and actually, literally, as of today, as of this morning, I think one of the things I woke up to was seeing Greg's post of this new role that you just mentioned. So AI experts out there who are interested in this banking mission that Tonik has, then yeah, check out Greg's LinkedIn profile and Tonik's LinkedIn to apply to that role. And you did bring up that topic on generative AI. I was also curious to know how you're looking at some of these, because AI obviously is not a new thing. And I think, especially for lending, it's been that technology that's being used already to really build out credit models and all of that. But specifically for like LLMs, generative AI, this next stage of AI, you talked about customer support being one use case. Are there any other interesting use cases that are very specific to banking? Because I think for customer service, that's pretty much, I think almost every business, that's like their low hanging fruit kind of use case, right? Let's turn customer support into like generative AI use case, but specific to banking or even fintechs, like anything that you're seeing that's interesting for you.
Look, in our business, we're primarily going to be focused on generative AI for customer service broadly defined.
Mm.
Okay. And when I say broadly defined, I don't just mean the customer chat and the interaction with the contact center. I mean that ultimately in the app for the customer to be doing this on the screen and filling out like that stuff, I believe it's going to go away at some point. And what's going to happen is you're going to have a more natural kind of language dialogue. And the dialogue is not going to be by typing into ChatGPT. It's going to be by pushing the microphone button and saying, hey, dude, I need a loan, $5,000. What do I do? And then the app talks back to you saying, and it walks you through the filling out of the application fields. Then it asks you all the questions and just goes and fills it out for you. And in the meantime, it also, you can ask it any other question about financial situation, financial planning, whatever it is. And it can also draw on that database and on those answers. What we're working on is to integrate ChatGPT into that. And we've done an internal pilot. And I'm hoping that by some point in the next few months, we might be able to bring it into a market pilot. But I think like that whole interaction of how the bank interacts with the customer, I think the generative AI is going to go right in between there and completely change the way of interaction. Like that stuff on the app, at some point it's going to go away because nobody really wants to do that. Okay,
Right,
it's
right,
much
right.
better than having to go to the branch and spend half a day there. But like ultimately doing that also is not very efficient. It's not a very natural way for humans to interact.
Yeah, so definitely like autonomous agents. I think it's quite funny how we went from the teller to the app and then back to some kind of automated teller, almost like a financial advisor or teller role there. Yeah. Coming up on next week's call.
I was an associate at Bank of America Private Equity in London back in late 90s. Right? I was actually allocated to the internet market, look for like internet deals, right? And back then it was like price per eyeball, right? Or whatever. It's some like very interesting methods. To me, that was actually a huge lesson even back then. That, okay, this stuff moves in waves and with irrational exuberance sometimes gets the better of people and you just got to keep a level head through it. And remember that business is there for profit, not for massive market share capture as a main assumption. That'll come. It'll come as a result of diligent focus on the profitability. I'm happy to see that in that space, that blue ocean space in the Philippines, the holy grail is really the untapped middle class client. And in that space, nobody's really made much progress in the last few years because it's tough. It's tough to create your own credit evaluation system, to train your credit model to the point of unit profitability. I got this ping from one of our customers, and she literally contacted me on the Facebook out of the blue and said, "Thank you so much for letting me take the loan," and walked me through the life story situation that had helped her to turn things around. And man, that just made my day. And then I shared that with the rest of the team. I shared with the whole company. And this kind of stuff you get every once in a while really makes it all worth it.
Thank you for joining us on this call. Make sure you get notified on when to dial in by following us wherever you're listening to us. If you're on YouTube, hit that subscribe button, toss in a like, and let us know if you'd like to hear more of this topic in the comments. See you all in our next call.